Today, again in this lesson, we are going to discuss the unrealized profit on manufacturing incomes. And there is a different question here. This is question number 6. Right? Question number 6. We are answering. This is the final workings, and this is type of different type of question. So you can go through it and let me know. Here, we will go to the question. In question, they have mentioned one thing. Two balance sheets they have given. They have given one balance sheet, right? Question number 6. TPLC is a manufacturing business. It accounts for factory profit at a rate which has not changed for some year, right? The factory profit at a rate which has not changed for some year. The following summarized information is available from its statement of financial position as at 31st December 2023 and 31st December 2022. Two financial statements they have given as at 2021 and 2022 and 2023. They have mentioned factory equipment, office and everything, right? So we have taken the balances, opening balances, because they have said in the additional information, following additional information is also available for the year ended 31st December 2023. The change in retained earnings comes from the profit for the year and a dividend paid of rupees 25,000. Right? Dividend has been paid. After paying the dividend only, the retained earnings has been calculated, right? Retained earnings. Right? So what they say is there were no acquisition or disposal of non-current assets, right? Non-current asset, there were no acquisition, right? And purchase of raw materials and production labor amounted to 246,000 and 195,500 respectively. Factory overheads included, right? Then they says they have given the opening balance and closing balance of the, we can get it, right? Previous year to 2022 December closing balance will come to the opening balance as at 2023, right? That closing balance 17 closing balance, 22 closing 2022 closing balance, we can take it as opening balance of the 2023. So as like that we have taken the opening balances like that, right? All the 2022 end of balances we have put it as a 2023 opening balance. 2023 closing balances we have put it as a closing balances of 2023. Okay, so having said that, the factory, they says factory overheads includes 26,000, right? They says the purchase of raw materials and production labor cost amounted to 246, and right, we have taken the 246,000. Wait, we will 246,000 as purchase of raw material. 246,000 as purchase of raw material we have taken, right? And thereafter they are telling 195,500 is amounted to labor. Labor 195,000. That also has been taken, right? So adjustment number 3 is finished. And distribution costs include uh, including excluding the depreciation 51,000, 51,000 and 81,000 excluding the depreciation, right? And factory overheads included 26,000 for factory rent and 31,000 for supervisory salaries. 26 and 31 we have taken, right? So now the problem is 31,000 factory overheads included, right? 26,000. Prepare the manufacturing account for the year ended, and profit, and prepare the income statement, right? So what they have said is, they have given, right, from the given information, provision for unrealized profit, they say 2,000 and 2,500. Provision for unrealized profit. So how we can get it? Provision for unrealized profit, that is closing stocks 12,500, right? Closing stocks, opening stock, right, and closing stock, right? So here the amounts are 10,000 and 12,500, right? Amounts, right? The unrealized profits. This is unrealized profits. This is 2,000 and 2,500. Then what is the profit margin? Profit margin. $2,000 divided by 10,000 into 100, and 2,500 divided by 12,500 into 100, right? Profit margin. Percentage. We can get the percentage, right? 2,000 divided by 10,000 into 100. 20 percentage, right? 20 percentage. Right? This is also 20 percentage. Right? This is the margin. Profit margin is 20%. Right? 20 percentage. So that is there. We have calculated and we are keeping that amount there. Right? 20% margin. We have a 20% margin. Right? Here they say depreciation. Differences. We can take the differences here. What is the difference? 11,200, right? This goes to the depreciation account. Depreciation, right? And that is factory. 11,200. Factory depreciation is 11,200. Right? And here from 23,600, if you deduct 20,400, 3,200, that is going to the P&L, right? Office equipment. Where is the office equipment? Here. 3,200. That is depreciation, right? So delivery vehicle 28 and 21,000. 7,000 goes to P&L, profit and loss account. 7,000 goes to P&L, profit and loss account. So we have done it. Trade debtors. If you know the sales or cash received, only you can get the purchases. Trade that sales, total cash receipts or something. Like that, cash and cash equivalent also like that. Trade payables also like that. Trade payable, we can get the difference as per purchases if they have given the cash amount. Provision for unrealized profit to the P&L during the charge for the P&L is 500, right? So 2,500. 2,500. Unrealized profits, we have to deduct it 2,500. Unrealized profits, right? Okay. Here they says retained earnings. Retained earnings, what they are telling about the retained earnings is the changes in retained earnings comes from the profit for the year end, year from the year, and the dividend paid 25,000. This closing profit is after the dividend paid. After dividend paid. After dividends, right? After the dividends payment. Dividend payment. What is the dividends? Dividends. How much is the dividend? 25,000 paid. 25,000 dividends paid. Right? If 25,000 is paid, then actual retained profit was 54,000. Actual retained profit was 54,000. If that is the case, right? Here you will say profit after dividend. Profit after the dividend. Right? This is closing stocks. Closing amount is 29,200 and add the dividend and less brought forward profit. Then 700, right? 8, 18,700 is the profits during the profits during the closing P&L is P&L amounted to P&L is P&L. This is 36,300. This is also 36,300. Under the 36,300, you have to deduct 29,200, right? That is 36,300 minus 29,200. Then that will comes to 7,100. 7,100 is the loss, right? Loss, right? 7,100 was the loss. Net, here you will say net operating thing net operating Loss. Loss. Nice. You will say 25,000 is the dividend paid. Then profits before dividend. Profits before profits, right? Profits before, right? Before dividend is, if you say, if you are paying 25,000, you are incurring a loss of 7,100. You are incurring a loss of 7,100. If you pay 25,000 minus 7,100, right? 7,100 in the same. 17,900 is the profit. 17,900 is the profit, right? Before dividends. Profits before dividend, right? Then working from backwards. Working from backwards. Because this is unrealized retained earnings they have given. Retained earnings they have given. Opening is 36,300, closing is 29,000. Means it has decreased. It has decreased. With that, they are telling the another adjustment that 25,000 dividend had been paid. After that, only this profit has generated. This loss was generated after the payment. Due to this payment only, we have suffered a loss of 7,100. Then profits before this dividends is 17,900. Okay. From that, you had to work it from backwards. Okay. Work it from backwards. We shall we do that? Then there says there were no acquisition, there were purchase of raw materials and production labor amounted to 246,000. Right? Purchases they have given. So we don't need to use this trade payable. Right? Trade payable is not needed. Right? They have given. So we have to work it from backwards. Right? What is the? That means 51,000 plus 7,000, it's equal to 58,000. 58,000. Right? This one is 84,200. 84,200. 58,000 plus 58,000 plus 84,200 equal to 142,000. 142,200. This is the expenses. Right? Then we will arrive. Then we have what we have to do is we have to add 17.9. 17,001. Then we will arrive at 160,100. 160,100. Right? 160,100 plus 2,500. 162,000. 162,000 and 600 is the gross profit. We worked out the up to gross profit 160,500. Deduct you will arrive at, right? Then here we will say gross profit is 162,600, right? If you say we don't know the revenue, right? Cost of the goods completed also we don't know, right? But we know only the gross profit, right? Revenue also we do not know, right? So we can get the revenue also. We can get the revenue also. We have to uh, come from the production cost. Now work it from here, right? All the expenses we have taken, right? Direct expenses, there is no direct expenses, so delete that. All the cost we have taken, right? And working into everything it can be taken and add it from here, right? That means this is, wait, wait. This is 257,000. 200 from the 257,000, you have to deduct 31,000. Then 226,000 material consumed. From the 226, you have to add 195,500. Then 400 and 421,000, right? 421,500 is the prime cost. It is the prime cost. Here, overhead cost, you have to add the overhead cost, right? Overhead cost 11,200 plus 26,000, right? Plus 31,100. It is 68,300. 68,300. Then if we add that 68,300 with 421,500 is equal to 489,800. Right? If we add that with the opening work in progress, it is equal to 492,600. Right? From that, if we deduct the closing work in progress, then 490,000 is the cost of goods completed. Where we used to have 20% markup. Markup has not been given in the question. Markup has not been given in the question, but we have worked it out. Right? What was the markup? Right? This is the opening stocks we have taken. Right? That is cost plus markup 10,000 and closing stock 12,000. We have we know the unrealized profit. Unrealized profit brought forward 2,000 here, carried forward 2,500. Then we can identify the profit margin now. We have divided by 2,000, 2,000 divided by 10,000 into 100 and percentage is 20. So 20% is the markup. Okay, understood? So now we are going to calculate the markup. Markup is 98,000. 98,000. Right? 490 into 0.2, 490 plus 490. 588. 588 is the cost transferred to trading account. So we know the cost of goods completed is 588,000, right? 588,000. So opening stocks we know, cost of goods no. Now we can complete the sum. 10,000 opening stocks, then 598,000 is the cost of goods sold. From that we have to deduct the closing stocks of 12,500. 12,500. That is 585,000. 585,500. Right? 585,500. Right? If that is the case, if we had to deduct 585,500, we should know what was the sales revenue. Revenue was at 162,600. Then revenue is 748,100. Right? Revenue is 748,100. Right? This is the revenue. So we have completed the sum. Right? So 107, you have running there. So you are getting the profit margin, right? Gross profit is 162,600. 162,600. Net profit before dividends 17,900. Then you are declaring the profit 25,000. And net operating profit or loss is loss 7,000. Alright. Now this is the way of working out such questions. You have to work it out from the backwards. You have to work it out from backwards. Right? So this is what we have. This is not a difficult. If you have a good idea about what is going on, what is the question, what are the informations are given, if you got that idea, it won't be a difficult task. Read the question very carefully. Whereas in such questions, you have to identify the provision for unrealized profits, retained earnings in the sense profits brought forward, carried forward for each year. That is the retained earnings. Right? This is provision for unrealized. If we have the provisions brought forward and purchases and sales and closing stocks, you have to relate that closing stocks with the unrealized profits. Right? From that, relating to those items, you can work it out from backwards to start point. Finishing point. From the finishing point, you are working out from the finishing point to start point. Right? That is what happens. Okay. If you have any doubt, let me know. So I have given all the workings here. You can take it down. And if you don't understand, you can ask questions, post your questions, ask your questions. I can clear your questions. Okay. So I hope you would have understood this my explanation. So I'm going to wound up the class. So I hope to meet you in next session, hopefully with the new chapter. Thank you. Welcome.